be commencing our last lecture for Module 1 today, and I want to say for those that been with us from the beginning of this virtual training, I'm sure you would have learned a lot, exposed to the different shades of Nigerian tax system. And again, as we said, the aim of this module is to give intending tax practitioners, those that want to practice Nigerian tax, a solid foundation in Nigerian taxation. So we've done evolution of tax, filing, computations, and the like. So today we are rounding it up with tax planning, and don't forget that all our videos you can also watch them online, at least during the period for which uh, you are in session. Of course, access online will end of this March. So from April, we're taking care of looking at new set of students or people that want to do module 2 or module 3. Okay, so January to March is this session, and I'm sure that you will utilize the period effectively. So today we are looking at tax planning. Tax planning, uh, module 1 planning. So because tax planning is a broad topic, it's very broad. It's at this stage that you will be asking ourselves a lot of questions. You've understood tax filing, tax law, tax administration, tax policy. So the tax planning now is how do you want to optimize your tax within your system in terms of minimizing the tax cash outflow by taking advantage of the tax law. So tax planning is, when it comes to value added, value that you want to add to organization, a good knowledge of tax planning will really help you. So tax plan is not only in the tax law. You may look at the tax administration, look at the tax policy, and you can get where you could identify some tax planning opportunity. And what do we mean by this tax planning? Let's look at the objective of today's session. At the end of this session, participants will be able to understand the meaning of tax planning, and you should be able to distinguish between tax planning, tax avoidance, and tax evasion. And again, participants will be able to identify tax planning opportunities in certain business structures. And these are the objective of today's session. Now, the question we're asking ourselves is, what's tax planning? Tax planning is an exercise undertaken to minimize tax liability through best use of all available exemption, deduction, rebates, relief to reduce income tax. Okay, tax planning can be defined as an arrangement of one's financial and business affair by taking legitimately in full benefit all deduction, exemption, allowances, relief, and rebates so that tax liability is reduced minimally. In other words, all arrangement by which the tax is saved by ways and means which comply with the legal obligation and requirements and are not colorable device or tactics to meet the letters of the law. So basically, I will still go further to ask to look at uh, you know this tax planning. When we talk about tax planning, one key aspect in this definition is arrangement of one's financial and business affair by taking legitimately the full benefit of the law. So the tax planning is you are working in line with the spirit of the law. This is what the law wants. The law wants to encourage SMEs. The law wants to encourage development in agriculture. That's the spirit of the law. That's why you see there are some provision in the Finance Act 2019, although amended, that gives when it came on then, that gives agriculture business 5 years tax holidays, but it has been adjusted now, transferred to IDITRA. That's the spirit of the law. They want to encourage agriculture. The tax law may want to encourage technology in terms of giving pioneer status to information-driven businesses, and you go into that kind of sector. So you are seeing the spirit of the law. You know what the law wants to achieve, and you are positioning your business better to achieve that. If the business wants to encourage manufacturing tomorrow, you will see some key provisions in the tax law that encourages manufacturing. So you go into manufacturing. So tax planning and tax avoidance are used interchangeably, but they are not actually the same. Now, tax planning, we are looking at tax planning, tax avoidance, and tax evasion. Definitely, this third aspect, which is tax evasion, is not good. But tax avoidance is legally, you are taking advantage of the loopholes in the laws. And tax avoidance, fine, you are working within the law, but in some jurisdiction, it's a crime if you are using a tax avoidance strategy, for your business. Now let's look at the decision. What the Honorable Supreme Court in the case of McDowell and Co. versus CTO back then said tax planning may be legitimate provided it is within the framework of the law. Colorable devices cannot be part of tax planning, and it is wrong to encourage or entertain the belief that it is honorable to avoid payment of tax by restoring to dubious method. When you are using colorable devices, meaning that you are not trying to you are trying to uh, take advantage of the pitfall or the loopholes within the law, then of course that is not tax planning. That is not tax planning. Okay, there are some mistake within the law now in the Finance Act 2020 that talks about if you file your tax return in the year 2020 and in the year 2020 and a year of assessment and 2019, then you are to pay a minimum tax of 0.25%. That's actually was an error in the law. For instance, someone can claim a kind of refund that, oh, the minimum tax was 0.5 that I used for 2019 accounts. And the law have said that minimum tax, if I file in 2020, is 0.25. Therefore, give me back my money. That is a mistake in the law. And when it comes to tax avoidance, you can go, your own is what's your business? Is it a mistake or is not a mistake? You go and you collect your refund or you fight for it because that was in the law. So what you are doing it is not tax planning. Okay, that could be avoidance rule. Okay, but tax evasion is bad. In terms of tax evasion, let's assume that you're a big company. I know that the big company tax rate is about 30%. Medium company tax rate is about 20%, and small company is 0%. So what happens is that now you're a big company, you are liable to pay tax of 30%. You are now not declaring your turnover completely. Then it therefore means that your turnover has been understated because you want to claim to be a small company. That's tax evasion. So that's a crime. Okay. So that's tax evasion. That's that's not good enough. So let me see noise at the background. So basically, we should understand that tax evasion refers to a situation where a person tries to reduce his tax liability by deliberately suppressing the income or by inflating the expenses, showing that the income lower than the actual income, or resorting to various type of deliberate manipulation. There are some expenses you not incur. You just see expense voucher, signed, for maintenance expenses. So that is tax evasion, and that is very wrong. Okay, and it's a serious crime. Although when it comes to tax evasion, it's we are not even in because of maybe the way our government is there. In some like Spain and some other country, it's really a serious matter. So basically, you must ensure